Okay. Good evening, everyone. I will come back to market analysis from elliottsignals.com, and Happy New Year for all of you. I hope you had a wonderful year. Actually, we had a very profitable year, and I hope you will. 2019 will be more profitable for all of you. As swing traders, I would like to, this video, I will give you, show the bigger pictures of the markets so that you can execute our trades for as a swing traders in the coming weeks. And as you know, we as swing traders, we use elite wave theory to build up our trades. This video is not suitable for scalpers or traders who are looking for a few pips. It is only accommodated to swing traders. Swing traders, we are looking for the whole wave. We are looking for whole wave for large profits. We enter our trades at prices that suits our strategy, which is minimizing the losses and enlarging the profits, so that you can have your all trades, positive trades. You can have your the results of your all trades are positive, despite of some stop losses that are triggered from time to time. As usual, we will begin with the dollar index. Price action of the dollar index is giving that this whole swing from this bottom to this top. Price action gives that this whole swing has finished in the form of ABC. This is A, this is all A, this is B, and this is C. So the price is trying to reverse from this area. The price is trying to reverse from this area. We are considering this reversal patterns as contracting ending diagonal for the dollar index. This is, we have 5 waves right there. 1, 2, 3, 4, and 5 in the form of wave A. This is wave B, very simple and clear, and this is wave C, which has just finished in the form of contracting ending diagonal. So we are expecting the price to start pushing to the downside. As I told you before, I will give you a bigger pictures for the market so that you can understand the next swing for the markets. The price will start pushing to the downside, and to retest this bottom right there. To retest this bottom right there. Once we have breached this bottom to the downside, price will continue moving to the downside. So what we are expecting to see from from this swing, we are expecting to see ABC. This is whole A, BC for the dollar index, and we are expecting to see a BC, which will test this bottom and might go beyond this bottom to lower price, to lower targets. That's all for the dollar index. I will show you 1 hour time frame so we are bearish for the dollar index, and our mission will be giving entry points. So we are agree that the dollar index is direction is to the downside. So your mission as a trader is to find suitable entry point for you, so that you can enter the markets. And as you know, and as we have shown and told you in the previous videos, entry points are given once we see a corrective structures, and you should be familiar with the corrective structures of the Elliott waves that might be triangles, zigzags, flats, and or complex structures. Sometimes I will show you, for example, we have this entry point for the dollar index. As we see, we have a running flat for the dollar index. So our entry point, the price is still within the range of this flats. So it is a suitable area for shorting the dollar index to the downside. Our strategy, as you know, we have an impulse right there. Then we have an running flat, and the price should continue moving to the downside. So we are talking about this entry point right there. So any movement for the dollar index to the upside will give you a proper and good entry point to short the dollar index. Our invalidation point for discount is around 97.50. So once the price reaches 97.50, we have to rethink about our analysis. We have to rethink about the reversal and the direction. But most of as told you, price action is telling that this movement to the upside has ended. This movement to the upside has ended in the form of contracting ending diagonal at this area. Then we have an impulse to the downside. This is an impulse. This is a complex correction in the form of, this is our impulse. I will show you in red. This is impulse. This is W. This is X. And this is Y. Okay. This is the first impulse. And the second impulse is right there. Is right there. Then we have a corrective structure in the form of running flat. Then we are expecting the price to move to our anticipated direction. That's all about the dollar index. This is me moving to gold. I will show you the bigger picture of the for the gold. This is the daily time frame. We have to take a large view for the whole count. We will start from this bottom for the gold. For this bottom, price has made ABC to the upside. then price has made ABC to the downside, then ABC to the upside, then ABC to the downside. I will give you, we will consider this as an impulse. This is very clear impulse for the gold to the upside. And the price has made a very familiar corrective structure for the gold. This is A, B, C, which is in the form of regular flat. This is whole A, this is B, we have B in the form of regular flat, as you see. Then we are expecting the price to move around 1,500. So our target for gold is 1,400. 1,400. So we have to stick to this, count, because it is very clear. We have an impulse, then our corrective structure in the form of regular flat. Then we should see we have C right there at 1,500. We will go to 1 hour time frames. So our mission for gold is to find a proper entry points for the price. We have to buy gold after each correction. After each correction, I will show you something very important regarding correction. You can go to and make your triangle right there, and try to copy this triangle and put it where any correction. You can see equality between this triangle. You move this triangle to this correction. They are two equal corrections. Then you can remove it right there, and the price has bounced from this area. So we are expecting price to move to the upside. And I see this is very nice entry point right there, because as you see, as I told you, you can go to make to this rectangle and try to move this rectangle where you are expecting corrections. You see equality between these corrections, and usually price will continue making the same emotions and the same behavior regarding the correction. So we have a very nice entry point right there and pushing the price to the upside. We will keep buying the gold until we see our C wave at 1,500. I will show you the silver. I'll show you silver market. We will go to daily time frame. Okay. This is regarding silver. Very clear. Impulse to the upside. Then we have a complex corrective structure in the form of this is W, this is X, and this is Y. This is whole A, this is whole B, and we have C at this top to complete the regular flat for the silver. So silver will be pushed to the upside, and we can buy silver after each correction to around 23 area. This is our target for this swing regarding silver. So we buy silver after each correction. You can go to 1 hour time frame and try to track the price right there. Okay, let me move to crude oil. We have a very nice bearish for the crude oil after completing 5 waves to the upside. I will show you the 5 waves right there. This is wave 1. This is wave 2 in the form of running flat. This is wave 1. Let me put the number 2. This is wave 3. This is wave 4 in the form of running flat. 4. And this is wave 5. This is whole, we can consider it as whole 1 or A. This is whole 1. And the price has moved to the downside aggressively to the downside. We can go to 4-hour time frames. In the form, the price has moved in the form of ABC. Of course, we cannot count this wave or this swing as 5 waves. This is counted as an ABC. I will show you how. This wave A, this is wave B, and this is wave C. A, B, and C. So I'm not expecting the price to make this symbol ABC and start pushing to wave 3 or wave C. I'm expecting the price to make a complex correction right there. Why? Because this movement to the downside has taken a very small amount of time. The price has pushed aggressively, so we are expecting from the price to spend more time at the correction, because regarding the rules of Elliott wave, corrections should take more time than impulses. So we are expecting this wave to be either, since we has begun this wave ABC, we should see a flat. So we are expecting a regular flat, running flat, or expanded flat. So in all cases, the price has to be pushed to the upside up to 61.8 of this movement, or even higher. So we are seeing the price, we will see the price go around 66 or 67 area. Or if we gonna see a expanded flat, we might see 77 for the price to go to this top again. So we are bullish for the gold. We can go after each correction and buy the we are bullish for the crude oil. We can go after each correction and buy the crude oil. Because we have seen this very nice entry point in the form of regular flat. This is a very beautiful regular flat right there. So, and the price started to move to the upside. So we have to track our mission in the next few months to track the corrective structures and to track the corrective patterns and to find a proper entry points for the crude oil. So crude oil is so bullish. We'll go to Dow Jones. I will show you the daily time frame. The price is making a very nice corrective pattern right there, which is an expanded flat. This is hole A, this is B, this is A, B, and this is wave C, which is incomplete. So wave A is ABC in the form of two waves. Wave B is has gone beyond the top of where wave A has started, and we have to see 5 waves right there. We should go to, we have to go to 4-hour time frame and tell you what we are expecting from the price. As you see from this 4-hour time frames, the price is moving impulsively to the downside in the form of ABC. This is A, B, C. This is a very nice. This is very nice regular flat for the very nice corrective structure right there. Then the price has moved to the downside in the form of A, B, C. So we are expecting the price in the next few sessions to move. So this is wave 1. I will show you the numbers. This is wave 1. This is wave 2. This is wave 3. This is wave 4. Wave 4 is incomplete and it is about to end. So the whole structure for wave C will be a contracting ending diagonal. So we have to see ABC to the downside for the Dow Jones. This will push the price down to 20,000. This will push the price around 20,000. So our next step for the Dow Jones is to watch this corrective structure. After this, we see this corrective structure. After this corrective structure is completed, we can go short. We can go short. So we have to show some patience right there and wait for the price to start going to the downside before we enter our short. If you want to go buy right there, you have to be very careful and use a very tight stop loss for your orders, because we should not we should not see equality between these two legs. We should not see equality between these, and it is not necessarily for the contracting in the diagonal to have the price crossing between wave A and 4. We can see the contracting ending diagonal without seeing this crossing between territories for wave 1 and 4. So we are bearish for the Dow Jones, and we are expecting lower prices. The price might move more than 4,000 pips to the downside. That's all about Dow Jones. Let me move to the euro. The euro is the reversal of the dollar index. So we are bearish for the dollar index. The same pattern, but in reverse direction for the euro against the dollar. We have seen this. We have seen this movement to the downside in the form of ABC, where wave C is in the form of contracting ending diagonal. So our next swing to the upside should be in the form of ABC. So the price has to test this high right there around 1.25 area. So our next movement to the upside, as you see, if we want to go to 1-hour time frame or 4-hour time frame, we have a very nice entry point right there. This is our first impulse to the upside. This is second impulse. Then we have this corrective structure in the form of expanded flat. This is expanded flat for the dollar. So we are expecting the price to move to the upside. This is a very nice entry point to long the euro. This is for the euro. Let me move into the pound. Actually, we have very nice structure and for the pound, and we should make very nice trade right there because pound is moving very fast. This is daily time frame, and I will give you a quick view for the count of the pound. Sure, we will start from there. As you see, we have very nice contracting diagonal right there. This is A. This is B. This is 1, 2, 3, 4, 5, and this is wave C in the form of 5 waves. So the whole structure for the pound is like this: A, B, C. For this swing, let's move to the bearish swing for the pound. The pound has made this bearish swing also in the form of ABC. This is A, B, and C. And wave C, as you see, A, B, sorry, A, B, and this is wave C. And we have to see price moving to the upside, at least to this top, to around 1.42 area, 1.42 to 43 area. We have a very nice contracting ending diagonal that has formed. I'll show you. Okay. This is a very nice contracting ending diagonal for the pound. In the form of 5 legs. This is A, B, C, D, and E. 1, 2, 3, 4, and 5. We have a very quick flash spike right there for the pound, so we are expecting the pound to start moving to the upside. We can go to lower time frame and to try to find our entry points. You have to buy the pound after each correction to the downside. So any movement to the downside is a chance to ride the buy orders, to ride the pound in the bullish direction. So we are still in low prices for the pound. This is 1.27. So we are expecting the pound to move very strongly to the upside. Let me move it to the Aussie, dollar. Aussie dollar has made this is daily time frame. As told you, this time I will use larger pictures so that you can understand how to trade to make your trades in the next few weeks or even months. This is A. This is B. This is A right there. B. And this is 1, 2, 3, 4, 5 in the form of expanded flat. This is C. And then we have made This is all A, this is B, and this is C. A, B, C. We had a very quick wave C. As you saw last week, USD has moved to the downside very strongly. To finish, it is wave C right there. So we are expecting the price to move to the downside to this level, at least to this level, to around 0.82 area. So any movement, we are still in the beginning of the movement. So you can build up your positions after each correction to the downside. You can go to the and go with the buyers to the downside. So we might see at this area a deep correction right there before the price started to move to the downside to complete its structures. So any corrective structure, you have to buy the USD after each correction, after each triangle, after each flat zigzag, after each pennant flags. You have to understand the corrective structures so that you will be able to make your trades. Regarding the Kiwi, we have a very nice structure right there for the Kiwi. The price is moving ABC to the downside. Then we have 5 waves to the upside, 1, 2, 3, 4, 5. Then ABC to the downside. So Kiwi should go to this level as well in the next few months to around 0.760 area. So any correction or movement to the downside will give you a chance to enter the market. So we will be in favor of the bullish trend unless proven otherwise. Okay, let me move to Turkish lira. Actual Turkish lira, we are expecting Turkish lira to move to the upside, but what it has moved to the upside actually. But what the price action has made is has made a very a shallow correction to the upside in the form of ABC. So we have to reconsider our corrective structure right there. We have to reconsider our pattern so that this will accommodate with the price action. So I think the price action is clear right there. If you were bullish with the Turkish lira, we have gave you a buy signal from this area after seeing this flag as shown you in the previous video, and we are expecting the price to move, and the price has spiked to the upside, but this movement is reversed very fast. So sustainability is very important for the price. Otherwise, we have to reconsider our corrective structure and to reconsider our patterns. So we have the only pattern that suit with the price action is a contracting leading diagonal. So we have to see 1, 2, 3, 4, 5. So we can join wave 5 to the downside. 1, 2, 3, 4, and 5. Then we have correction in the form of ABC before the Turkish lira gaining more strength again to the against the dollar. So very clear structure right there for the Turkish lira. We can go short. This is our limit for the selling the dollar against the Turkish lira. This is our limit. This is the top of the spike, and then we have to go to lower values for the Turkish lira before making another correction to the upside. Then before Turkish lira gaining more strength. So if you want to buy Turkish lira for long run, you can wait for wave 2 or wave B. This is wave 2, will be wave T, wave 2 or wave B. If you wanna invest in the Turkish lira, you have to show some patience because it is very early. Because we might see some strength right there before reversal. So you can get a better prices if you show your patience for the Turkish lira. We will keep you updated regarding this market because it is moving very fast. Let me move it to the Swiss franc. Actually, Swiss franc has ended this movement to the upside. I will show you these two legs. This is the first leg, ABC. Then we have the ABC, ABC. Then A, B, C, and this very clear 5 waves. If you go to lower 4-hour time frames, you can see very clear. So we are expecting Swiss franc to move to the downside to complete the structure. So we are expecting the price to retest this bottom around 0.92 area. Very easy corrective structure for the Swiss franc. So any movement to the upside for the Swiss franc, it is an opportunity for you to ride the market in favor of the bearish trend. This is the 5 waves which has completed right there to form expanding ending diagonal. This is expanding ending diagonal. This is hole A, this is B, and this is C in the form expanding ending diagonal. So we are expecting the price to move to the downside strongly in the next few weeks. So any movement to the upside, you can short the Swiss franc. Let's move into the dollar yen. Dollar yen has making a very nice triangle right there. This is I will show you the bigger picture. This is daily time frame. As you see, this is a very clear impulse to the downside. Then we are seeing a very nice triangle right there. This is whole A. This is whole A. This is all movement is A. Then A, B, C, D, and E. So the price will be moved to the downside after exiting from this triangle. So we are so bearish for the dollar against the yen. We are expecting the price to go to lower prices to around 88 area. I am giving you the long run trades, the long run swings. So your mission is to find a proper entry point for you and try to ride the markets. I will show regarding the CAD. Actually, the CAD has finished. It is the CAD has finished. It is corrective structure. I will show you how. This is move A. This is B. And this is 1, 2, 3, 4, 5. This is C, which was in the form of expanding expanding ending diagonal. This is an expanding ending diagonal. 1, 2, 3, 4, 5. So we have to see the Canadian dollar gaining more strength to the downside. So our next trade for the dollar is movement to the downside to around this area. So we are so bearish for the dollar against so we are so bearish for the dollar, Canadian dollar. It is very, you will have a lot of money right there for the Canadian dollar. It will move to low values right there. It is very nice to invest your trades for as Canadian dollar. You will have a lot of money right there. Okay, that's all for today. I will give you another video for this week to complete this analysis. I will show you I will send you throughout Twitter and Telegram channel this pairs movement by tomorrow: pound chief, euro yen, pound yen, pound cad, euro pound, and pound Uzi. Thank you for listening and see you in another video. Goodbye.